Hello, everyone. Good morning, ladies and gentlemen. How are we all doing today? And trust you are really doing very well out there. And trust you are getting ready for the New York session today. Okay, so let's confirm that we are good to go this morning. So if you can see my screen and you can hear my voice clearly, I would appreciate that you type in hi in the comment section, as this will help me to be able to confirm that we are all on the same page together. So I would like to see some feedback, please. Let's see what's happening in the comment section. Okay. I can see AK Abdullah. Good morning. Thank you. 71310. Good morning to you. Dawild. Good morning. 2045. Good morning. Thank you very much. Hey Carrie, how are you doing this morning? Good morning to you too. Yes, it's happy Friday. All right, so I will take this as a positive feedback that we are good to go, that the sound quality is okay, and the visuals are quite right. And it's on this note, I welcome you to yet another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where we shall be diving into an exciting analysis of the financial instrument on our watch list for this week, which includes the GBPUSD, the XAUUSD, the USOILSPOT, and the USTech100. So we are going to be taking through a comprehensive price action perspective, and we are also going to be exploring the recent movements and chart patterns of this instrument to uncover key insights that can potentially shape our trading decisions ahead of the New York session today. And for those who are joining us for the first time, you are highly welcome. I'm really glad to have you guys around. And the purpose of this is we come here together as a community, gathering in anticipation of the New York session. And during this time, we will be reviewing and managing our current position, while we also aim to position ourselves strategically for today's trading session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time, as we always get ready for the New York session. So I implore you to stay tuned in and continue to be with us in our subsequent editions, as with time, the more time you spend with us, the easier it gets for you to be able to use the information you have gathered here to make your independent decision on your account. So once again, I welcome you on board. With that being said, let's dive right into the business for today, and you all know how we do it. The first thing we are going to be doing this morning is to check the economic calendar. And you all know how important the economic calendar is for us in this community, as these are fundamental factors that often manifest on the chart in technical patterns and price movement. And by monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns. And in fact, in the last 1 week now, throughout this week, we have a handful of high impact events that we have been reviewing and taking into consideration of while we review our current market structure from a technical standpoint. So coming from the back of the retail sales data, which came in yesterday positive, we saw how the US dollar suffered heavy losses against its major rivals on Thursday. And I think this morning we're beginning to see some traction in that regard as regards the US dollar. So we are going to be looking at that one too as well. Then for today, Friday, June 16th, we have 4 high impact macroeconomic events. We have one from the Japanese economy, which has already happened, and that is the interest rate decision. And they retained the interest rate decision by minus 0.1%. So there was no change at all on that one. So we are going to be looking at how the market reacted to this data and what we expect to see as we prepare for the New York session. Then we also had the monetary policy statement and the press conference. I'm yet to get an highlight on that one, which I'm not going to be able to talk further on that one at this point. Then we have the Michigan Consumer Sentiment Index, which is coming up later, I think in about 3 hours from now. And this is released by the University of Michigan, and it is a survey of personal consumer confidence in economic activities. So it gives us an insight into whether or not consumers are willing to spend money. And generally speaking, a high reading anticipates positivity for the US dollar, while a low reading is seen as a negative signal for the US dollar. And from the data we have here, the previous data for the month of May came in at 59.2, and there is a general consensus that projects that we are going to be looking forward to 60 for today. So we are going to be looking forward to see what the actual data is going to be. Will it be as expected, below expectation, or even beyond expectation? But what we are going to be doing here as technical traders is to look at the chart and identify structures on the chart that we are going to be using to position ourselves ahead of this event. So with that being said, here we are going to be diving right into the business for today. And I'll also like to state here that considering today being the last trading day of the week, on last trading days of the week like this, it is always common that traders close their positions and take profits before the weekend, and this might likely reflect on the chart as price action moving in the opposite direction of the prior leading price action. So we are likely going to be seeing some profit taking activities today ahead of the weekend. We're also going to be taking this one too into consideration while we monitor price action. So the first instrument we are going to be taking on today is the US oil spot. And so far so good. This week has been profitable for us on the US oil spot. So I would like to take us through the beginning of the week, what we saw here, and how we have been buying or selling the US oil spot so far this week. So at the beginning of the week, we acknowledged that price action was on a strong bearish note after identifying this range where price action was caught within, that is the $70.10 level and the $69.30 area. So this was the range where price action was at the beginning of the week, and in fact it gave us a simple setup to work with. And you know how we do it whenever we have this kind of simple flat channel. We always want to wait for price action to either break out of the resistance line for an opportunity to buy, or break down the support line for an opportunity to sell. And in fact, prior to the live session on Monday, we already witnessed this breakdown happen, and that was a clear sign for us that price action is likely going to be bearish for the week. Though we missed out on that opportunity, so we anticipated that we are going to be waiting for new structures to mature before joining any potential move. And one of the parameters we used at the beginning of the week to guide our trading activity was this trend line we identified after connecting the series of lower highs. And one thing we agreed about this trend line is that as long as price remains below the trend line, we feel comfortable selling the US oil spot and even look forward to more opportunities to maximize the bearish move. And since we missed that opportunity at the breakdown of that support line there, we waited for price action to come back and retest structure, and with a level situated at the $68.63 level, this level right here, we had a sell stop order below that level to take advantage of a bearish move, and with a sell stop order below that area, we had our first sell position for the week triggered. And we also had the privilege of adding more positions. As you all know, we had a sell stop order again below the $67.80 level, which also was triggered to the downside. So as at the first day of the week, we were already profitable on the US All Spot. The first position gave us about 170 pips, and the second position gave us roughly about 90 pips in profit. So we were already over 200 pips in profit on that one at the first day of the week, which gave us a very positive start to the week. Then on Tuesday's trading session, we acknowledge how sellers were finding it difficult to break through the $67 area. We saw the first attempt here, which failed. Then we saw again during the early hours of later part of the New York session on Monday that it also failed to as well. And this gave us a clear sign that buyers might likely be gaining some momentum at this particular point in time. And during our live session on Tuesday, we acknowledged and connected a series of higher lows to give us a trend line to work with. And what we said here on Tuesday is that we are going to be using the $67.80 level as a yardstick to guide our trading activity. So we were looking out for a breakout retest of the $67.80 level to be part of the bullish move to the upside, and this was exactly what happened. And if you look at the current structure, you will see that since the breakout of the $67.80 level, price action had moved over 280 pips in our favor. And don't forget that we were able to maximize the potential of this bullish move by adding more position at the breakout of the $68.63 level, which also moved over close to 200 pips on that one too as well. Then we also added another one position again at the breakout retest of the $69.30 level. So it was quite a profitable first half of the week for us. Then during our live session yesterday, we acknowledged another simple setup which was gradually unfolding. And because of this trend line we had here, remember that we said as long as price remains above this bullish trend line, we shall be looking out for buying opportunity. But during our live session yesterday, we saw how price action broke through the trend line during the Wednesday trading session to give us a signal that we might likely be seeing a bearish move. But one thing significant happened here that we saw that made us to change our bias. Now let me show you what we saw here yesterday as regards to the structure. So following the breakdown of this trend line, normally this should be seen as a bearish signal. But one important thing happened here on Thursday morning, where we saw how it was difficult for sellers to break through the $68 level. So every attempt by the sellers to break through that structure throughout the early hours of yesterday was negated by the buyers. And when we observed this during the live session yesterday, we agreed here that we are going to be looking out for buying opportunity if price action breaks out, retest the $68.60 level, which is serving as the platform upon which we want to be buying yesterday. And in fact, prior to the live session, we saw the breakout of the structure. And I told us all yesterday that if you had missed out on that opportunity, that we could be waiting for more opportunity to join. If price action comes back to retest the structure, then we could join the move to the upside. Then we also had another level at the $69.28 level, where we said a breakout of that structure, let's have a buy stop order to be able to capture that move. And in fact, since yesterday, as you can see here, price action had moved significantly well. So on the first position, we had over 230 pips, and on the second position, we had over 150 pips in our favor before we started seeing this choppy situation go on in this market. So for those who had been part of this profitable journey so far this week, well done to you for being on standby to catch this move. And for those who will still have a buy position running at this particular point in time, I'm of the opinion that it's high time that you moved your stop losses to secure this current position, as anything could happen from this point. And if you are going to ask me where to move your stop loss to right now, I will be suggesting any area right below the $70.50 level and the $70 area, as you want to give room for price action to breed with the hopes that price will still continue to the upside. Now, with this position secured at this particular point in time, how do we intend to position ourselves ahead of the New York session today? So we want to have a fresh new look at the current market structure. Now, this morning, while I was trying to identify a new setup that we can use to guide our trading activity for today, I saw here that since the New York session yesterday, as soon as price action got into that area around the $71 level, a very important psychological area considering the round figure of that price, we saw how sellers jumped in to negate all bullish attempt to break through that structure. We saw the first attempt by the sellers to negate buyers' attempt here during the later part of the New York session. Then we also saw during the early hours of today, we saw how sellers jumped in again to negate buying attempt. And because of this continued selling pressure around that $71 area, I'm of the opinion that you want to be moving your stop losses, as we might likely see a sell-off happen today. And considering the fact that today is the last trading day of the week, majority will want to be doing some profit-taking activities, and those who bought at a cheap price at, let's say, around the $68 level will at least want to be selling half, making some money off what the positions they have made ahead of the weekend. And this might likely result into a retracement of that impulsive move. We never can tell. Probably price will respect this trend line one more time to incite another bullish move, or probably break down this trend line to incite a sell-off. So we are going to be looking into the details on how we are going to be positioning ourselves ahead of both the ahead of the New York session. So right now, our center of focus is going to be around the $71 level and the $70.50 level, as you can see here, as we already have a consolidation phase. And you know how we do it whenever we have this kind of simple flat channel. We want to wait patiently for structures to mature, as we will be seeing either a breakout of the resistance line of that channel to give us an opportunity to buy, or the breakdown of the support line of that channel to give us an opportunity to sell. So since we have a bullish impulsive move that led us into this point, that is this impulse leg here, I want to be having a buy stop order above the resistance line, with the hope that this whole structure that we are seeing here will transition into a trend continuation pattern. So since I'm profitable so far this week, we want to leverage on the profit we have made so far this week to test waters around the $71 level, have a buy stop order, then have a stop loss sitting somewhere close to this resistance line, which will be dovetailing to about 45 to 50 pips thereabout. And let's see how price action will be playing out from that level. Now, in as much as we hope that price action might likely break out of the $71 level, we cannot ignore the potentials of the sellers too as well. And you know how we do it in this community. In as much as we are looking forward to an opportunity to buy, we also want to ensure that we also keep tabs with the potentials of the sellers too as well. And now, from this current structure we have in this market, what do we want to see on this chart that will make us to change our buyers from bullish to bearish? Now that we have a flat channel to work with, and we have a support line around the $70.50 level, the $70.50 level will be a reference point for us to look out for selling opportunity. And what do I mean by that? We want to see price action break through the $70.50 level. Remember, we are not getting too excited here. We are not having a sell stop order here. It has been a strong bullish momentum in the last 24 hours. Hence, we want to be very, very careful, as a breakdown of the structure could be a false breakdown where price could still skyrocket to the upside. So we want to wait for confirmations to happen around this area, which would reflect on the chart as price action retesting the structure. So as soon as we have a breakdown, which has already happened at this point, we want to scale down into a much more lower time frame, where we want to see continued selling pressure below the structure, where buyers found it difficult to break back above the $70.50 level, then at this point, we want to start considering selling the US oil spot for today. And now, if price action continues in such a way that it breaks down this trend line that we identified here, then at this point, this will confirm that sellers might likely dictate the pace on the last trading day, that is today, to incite a sell-off in this market. So let's keep this in mind. Let's mark these levels out on our chart so that we can be able to use them as a reference point when we're about to make our independent decision. So a final breakdown of this ascending trend line will definitely be the key moment where we'll be looking out for selling opportunities in this market. So let's see how this plays out in the next couple of hours, and try to be on standby to catch any of these trading opportunities today. So that is my view here on the US oil spot. If you have any questions whatsoever, or you want me to clarify on an aspect you find it difficult to understand, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. I can see some comment here. I see one from 7474. Good morning to you. Thank you for checking in. Nest 57. Good morning to you. Thank you. 15711 5967 and 7115. Good morning to you all. I can see Teruna. You're welcome. Trust you are doing well. All right. So in the absence of no questions, I will take it as a confirmation that we're on the same page. So on that note, I will be moving on to the next option on our watch list. And the next option on our watch list is the USTech100. Another profitable instrument for us in the last 24 hours. In fact, since the beginning of the week, we have been very, very profitable on the USTech100. Now, before we go into the details of what our expectation could be like for today, I would like us to do a quick review of how the week started for us and what led to the idea of buying the USTech100. So at the beginning of the week, on the 1 hour time frame, we were able to acknowledge a consolidation phase, which revealed the level of indecision in the market at the beginning of the week. And this was this zone here between the 14,595 level and the 14,545. And you know how we do it whenever we have this kind of simple setup. We want to wait patiently for either a breakdown of the support line of the channel to give us an opportunity to sell, or the breakout retest of the resistance line of the channel to give us an opportunity to buy. And in fact, the latter was what happened here, as we saw price action broke out of that resistance line prior to the live session on Monday. And one thing I told us here is that we are going to be waiting for price action to come back, retest the structure to give us an opportunity to have our first buy position for the week. And this was exactly what happened. A couple of hours into the New York session on Monday, we saw price action drop back into that area. And since then, as you can see here, price action had continued to find higher highs, and at the same time respecting that bullish trend line that we identified at the beginning of the week. So it was quite a profitable week for us on the USTech100, and in fact we had the privilege of maximizing this bullish momentum by adding more positions at the breakout of the 14,670. If you remember, we had a buy stop order above that level. We also had a buy stop order above the 14,830. And during our live session yesterday, we also acknowledged that if price action breaks out of the 14,950, we are going to be adding more position to our existing trade. And as you can see here, price action broke out of that structure. And in fact, in the last 24 hours, we saw how price action moved over 300 pips in our favor. So it was quite a profitable week for us on the USTech100. And for those who are part of this profitable journey, well done to you. Kudos to you for being on standby to have caught this opportunity. Now that we have this whole position locked in at this point, please remember, for those who still have a buy position running at this particular point in time, you know how we do it in this community. Whenever price action moves significantly well in our favor, we always want to ensure that we move all stop losses to secure the current position. So if you are yet to secure your position right now, well, it is appropriate that you do so immediately. And the most appropriate area, I think, at this juncture is that area between the 15,140 and the $15,080 area. So that area is where you want to be moving your stop loss. Of course, we want to give room for price action to breathe. Now that we have our positions locked in at this point, how do we intend to take advantage of any trading opportunity today? Are we still buying the USTech100, or are we going to be getting ready for a sell-off? That is, profit-taking activity could start coming in to trigger a huge sell-off in this market. So the first thing I'm going to be doing here is to acknowledge the fact that price action has been bullish since the beginning of this week. So I want to extend the ascending trend lines that we identified here so that it can capture our next line of action. So now that we've extended the trend line, so this trend line here is one of the parameters we are going to be using to guide our trading activity for today. And one of the things that we normally use our trend line to gauge is that it helps us to remain comfortable in whatever position we had, depending on the nature of the trend line. So if it's an ascending channel just like the one we have here, we expect that as long as price remains above this trend line, we shall feel comfortable in our buy position, while we also look out for more opportunities to maximize this bullish move. Now, for the fact that price remains above this level, it's obvious that we want to look out for buying opportunity. But one thing here that we also want to take into consideration here is the fact that as soon as price action got into the 15,250 level during the later part of the New York session yesterday, we saw a strong selling niche from that area, giving us signs that there are sellers around that area that will be negating the buying attempt. And this might likely be the beginning of a retracement phase. Probably those who are taking advantage of a cheap price on the USTech100 will definitely want to be selling off their positions to make some profit off what they have as they get prepared for the weekend. So we might likely be seeing a sell-off at this point. And if we are going to be seeing a sell-off in this market today, what do you think we can see on this chart that will help us to be able to capture that bearish move? Now that we have selling pressure around the 15,250 yesterday, and during the early hours of today, you still see here that buyers are still struggling to break out of that level. So we saw the sell pressure bring price into the 15,000, let's call it the 130 level. And since price got here, you can see we are yet to see price break out the previous high. And for me at this point, we might likely be seeing a lower high that might incite a bearish move. Now let us identify the support line here, as we definitely want to be using something to guide our trading activity for today. So we have something around the 15,130 level, which is right here. So you want to mark this out on your chart right now, as we are going to be using this as a reference point to guide our trading activity today. So we have the 15,130 level. So I will place this at the bottom right hand side of my screen right here. And as you can see, it also shares a confluence with our trend line. So what we are going to be looking out for to sell the USTech100 today is if price action breaks down the 15,130, which also shares a confluence with our trend line, then we'll start considering selling the USTech100 today. But remember that we are not going to be getting too excited to sell. We are not having a sell stop order yet, as we'll still need some confirmation to happen before we join a bearish move. It is quite obvious that price action has been bullish since the beginning of this week, so it's not reasonable to jump into a sell position just because price action broke down a level. So if price action breaks down either the 15,130 or this trend line to the downside, the next thing we are going to be doing is to scale down into the lower time frame. It could be your 15 minutes, 10 minutes, or 5 minutes time frame, where we are going to be looking out for patterns and structures that support the idea of selling the USTech 100. So we are going to see signs like a retest of structure, that is, buyers find it difficult to climb back above the 15,130, and if this continuous selling pressure persists, then at this point we want to be part of a bearish move to the downside. And we have key levels like the $15,050 area, where a breakdown of that structure will definitely welcome more opportunities to sell. We also have the 14,950. So these are very important key level that we can use to maximize the potential of this bearish move if price action ever breaks down that 15,130 level. So that is how we are going to be looking out for selling opportunities in this market on the USTech 100. Now you might want to screenshot my screen or use it as a reference so that you can use it as a reference point to guide your trading activity. Now, in as much as we have considered the potentials of sellers here because of the continued selling pressure we have been noticing around the 15,250 level, we cannot ignore the potentials of the buyers too as well. You can see since the beginning of the week, price action has been very bullish in this market. So it is quite clear that thinking of bullish opportunity here is still very, very reasonable. But for me to buy here at this point or to add more position to our existing trade, what do we want to see on this chart that will make us to buy? Well, if we consider the impulsive leg that brought us to the point where we are in right now, there is still a possibility that price action could still transition into a trend continuation pattern that will lead to the breakout retest of the 15,250 to signal another wave of bullish momentum. And since I'm already profitable so far this week, I could still afford to leverage on the profit I've made so far this week to test waters around the 15,250. So I will be having a buy stop order above the structure, where a breakout of that level will probably have taken out all the sell position along that area to give a bullish signal. And if price action comes back to retest that structure, we shall feel more comfortable to add more position to our existing trade. So that is how we are going to be buying or adding more position to our existing trade on the USTech 100 for today. So if you have any questions regarding what we just explained here, feel free to let me know in the comment section, or if there is an area you think you want me to shed more light on, I'm willing here and ready to be of help in that regard. So that is that on the USTech 100. So I can see a comment from Gambler21. Okay, good morning, Gambler. How are you doing today? So Gambler is asking that what's the chance for gold and silver today, up or down? Sorry, someone talk in your box. I can't hear you clearly. Really, you can't hear me clearly? Is that true? Okay. Can someone else confirm that I'm not being heard clearly so that I can do some adjustment to my audio quality? And Gambler21, I will probably advise that you shut down your app and then restart it all over again to see if the situation persists, and if it does, let me know so that I can do some readjustment. But from my monitoring device here, things are sounding quite fine here. And then restart it all over again to see if the situation persists, and if it does. Okay, so you're asking about the gold and silver. Well, the gold is on our watch list for today, so for this week. So we are going to be checking the gold in a moment, and if there is time, I will be looking at the silver for you. All right. So that is that on that one. So I will be moving on to the next instrument. So the next instrument on our watch list, hold on a second. Not again. So I'm trying to see the sequence at which I took this instrument this week. Okay, so it's the XAUUSD that we are going to be treating next. So let's move on to the XAUUSD. So on the XAUUSD, this is another instrument. I can say the XAUUSD happens to be the most profitable instrument for us this week. Let's look at what happened at the beginning of the week so that we can have an idea of what we were looking at. So to do that, I want to scale up into the higher time frame, that is the 4 hours time frame, where we identified a very important zone which has been a major determinant of price action in the last 4 weeks, I think. So here we are on the 4 hours time frame. And one of the things we saw here on the 4 hours time frame was this zone around the 1,960 and the 1,965. And if you look at this current markets closely, you will see how this zone has been a major determinant of price action since the second half of the month of May. Now look at this closely. We saw here how this level was a demand zone at this point. It was also a demand niche around this area before price action broke down, retest the zone during the last week of last month. And during the last day of last month, stroke the first day of this week, we saw a consolidation phase around that area before price action broke down the structure at the beginning of this month. We saw retest of structure, selling pressure around that area. The same thing also persisted into last week, stroke the first day of this week. Now, you will see how that area has been a major determinant of price action, making it a key zone for us for the week. And you know how we use our key levels and zones. When price remains below the key level, we look out for selling opportunities. And when price action breaks out of the key level, we look out for buying opportunities. And look at what happened throughout the course of this week. You see that most of the time, price action had remained below that key level, giving us the sell position we enjoyed during the first half of the week. And in fact, we were able to maximize that move by adding more positions to our existing trade. Then yesterday, we had the privilege of being part of this buy position, which I will be showing you in a moment. We had a simple setup on a lower time frame where we saw an opportunity to buy. So I will be talking about that when we scale down into the 1 hour time frame. But right here now, you can see the bullish momentum we saw yesterday appear to have brought price back into that key zone. Remember how important that zone is in the last couple of weeks. Now price is back into that area, and at this point, you would agree with me that we are at a critical time in this particular market where anything could actually happen. And this area here is going to be a major determinant of how price action will be playing out today. So one of the things we are going to be looking out for around this area on our lower time frame is if selling pressure resumes around this area where buyers find it difficult to break out of the 1,965 level, then we will have no other choice than to join a bearish move to the downside. But if price action happens to break out of the 1,965 and in fact close above that level, then at this point we want to be seeing this as an opportunity to join a bullish momentum. So with the information we have gathered here on the 4 hours time frame, I needed to show you this so that whenever I'm explaining things on the lower time frame, you will understand clearly why the decision we are making is what we are making actually. All right. So with the information we have gathered here, let's scale back down into the 1 hour time frame. Now, on the 1 hour time frame, we shared something here yesterday, how to take advantage of that bullish momentum, and I think we spotted the setup on the 30 minutes time frame. Please give me a moment, please. I had some technical issues right now I need to sort so that we have a better experience. I'll be right back. Sorry for the break in transmission. I had to switch to another device so that we can have a better experience. So don't mind the screen here is smaller than the previous one, so I'll try to bolden it while I explain particular areas in the structure. So right back to where we are during the so we were looking at how we took advantage of the trading opportunity yesterday. So we had a simple setup which we identified after noticing how how sellers found it difficult to break through that zone between the $1,929 and the 1,930 area. So we saw the rejection of that zone multiple times prior to the beginning of our live session yesterday, where I said here that if this persists, we are going to be looking out for buying opportunities above the 1,934 level, as you can see here. So this was where we were trying to position our buy opportunity in this market. Then I also mentioned here that we are going to be selling if price action breaks down, retest the structure, which actually happened. We had a sell stop triggered at that point, but we were taking out at break even. And if your price moved about 50 pips before price came back to take us out of that position. And I do hope that you moved your stop losses accordingly to lock in your profit before price action could have taken you out of that one. And with our buy stop order situated above the 1,934 level, we had our buy position triggered. I think that was our first buy position for the week, I think, yes. And we also had the privilege of adding more positions, had the breakout of the 1,937, the 1,940. Remember, we identified those levels during the live session yesterday where I said we are going to be maximizing the potential if price action keep on breaking out these levels. So we also had the 1,949 and the 1,960 level. So it was quite a profitable 24 hours for us, as we had about 1, 2, 3, 4, 5 positions running on the XAUUSD, giving us over 900 pips in profit. So in fact, the XAUUSD happens to be the most profitable instrument for us for this week. And for those who are taking advantage of this opportunity, well done to you for being on standby to have caught this move. And if you still have a buy position running at this particular point in time, then it is appropriate that you move all stop losses to secure this current buy position. And if you would ask me, the area where I think you could move your stop losses to is anywhere below the 1,960 and the 1,954. As you all know, we want to give room for price action to breed. So let's see how this will be playing out from this current structure. So with our positions well secured at this point, what is going to be our next line of action for today? Well, we already identified a zone on the 4 hours time frame. Remember, a couple of minutes ago, we talked about how price action, how the zone between the 1,960 and the 1,965 area has been a major determinant of price action since the second half of the month of May. And considering the fact that price is back into this area, we need to be very, very patient, waiting for structures to mature in order to gain advantage of any potential move. And you all know how we do it. Whenever price action is within a range, we want to wait patiently for price action to give us a signal, which is likely going to be coming in the form of either a breakout of the 1965, which happens to be the resistance level for an opportunity to buy, or the breakdown of the support line at the 1960 for an opportunity to sell. So since we are already profitable on the XAUUSD so far this week, I could still afford to risk some of the profit I've made so far to test waters around the 1965 to be part of any bullish move at this point. So what I simply mean here is to have a buy stop order above that structure with the hopes that price action will continue to the upside, then have a sell stop loss sitting around the 1960 area, which will dovetail into about 40 pips as we look out for more opportunities to buy above the 1965. However, if price action does not go to the upside and instead it continues to drop to the downside, and there is a high chance that we could be seeing some selling opportunities. And if price does that, breaks below the 1960, you scale down to your lower time frame to look out for a retest of structures or signs that buyers are finding it difficult to break back above the 1960, then at this point we want to start considering selling the XAUUSD. So at this particular point in time, we are at a critical zone in the market right now where price action has been ranging between that zone we identified on the 4 hours time frame, that is between the 1965 and the 1960. So let's see how price action plays out from this level. So above the 1965, we're looking out for buying opportunities, and if price breaks below the 1960, we shall be looking out for opportunities to sell the XAUUSD. All right, so that is that on the XAUUSD. If you have any questions, feel free to let me know in the comment section. 603, good morning to you. CCMB, good morning to you. Thank you very much for checking in on us. All right, so let's see how this plays out. I will be checking the comment section to see if you have any questions for me as I continue into the last instrument for today. So the next instrument on our watch list is, let me see, the GBPUSD, of course. So the GBPUSD is the next instrument we are going to be looking at this morning. So on the GBPUSD, we have also had a very monumental move here on the GBPUSD as well. As if you remember during our live session yesterday, okay, let's run through how this week started for us on the GBPUSD. So I would like to zoom in to the start of the week. So let's zoom right into how the week started for us here. So at the beginning of the week, we acknowledged a flat channel where price action was initially ranging between the 1.25850 level and the 1.25650 area to give us a structure to work with. And this also gave us an insight into the level of indecision in this market at the beginning of the week. And then coupled with that range we had there was our key level for the week, which was situated at the 1.25900 area. And you know how we use our key levels. As long as price remains below the key level, we want to be looking out for selling opportunities. And not only if price breaks out the key level can we be thinking of buying. And in fact, during the first half of the week, price action was mainly below the key level, which gave us an opportunity to sell. And we also had this trend line here where we identified it after connecting the series of high and lows, and we agreed on Monday that if price remains above this trend line, we shall look out for buying opportunities. But if at any point in time this trend line is broken to the downside, we shall be looking out for opportunities to sell. And this was exactly what happened during the New York session on Monday. I think an hour into the New York session, we saw the breakdown retest of the structure in our lower time frame, giving us our first sell position for the week. And in fact, we had the privilege of maximizing the potential of that move as we added more positions at the breakdown of the 1.25650. We also added more positions at the breakdown of the 1.25400 level too as well. So if we look at what we had at the beginning of the week, I think the first position gave us about 90 pips in profit. The second position gave us about 75 pips. And the third position here gave us about, about 54, 53 pips in profit too before this old bullish momentum happened. So as at the beginning of the week on the GBPUSD, we considered ourselves profitable as we maximized the bearish momentum there to the downside. Then on Tuesday, we begin to see the appearance of buy pressure where price continued to find higher highs and higher lows. And in fact, on Tuesday, we were thinking that this old bullish momentum we saw here might likely be a retracement of the bearish impulse leg where price might likely retest the key level at the 1.259 to incite a trend continuation to the downside. But we were wrong at that one. And one thing we did here on Tuesday to help us capture any potential move here was the simple structure that we identified here. So this was what we saw here on Tuesday. We saw how price action was ranging between the 1.25770 and the 1.25540 zone. And what we said here is that, as usual, you know how we do it. Whenever we have this kind of simple flat channel, we want to wait for price action to either break down the support line for an opportunity to sell or break out, retest the resistance line for an opportunity to buy. And in fact, the latter was what happened. Just a couple of hours into the New York session on Tuesday, we had our first buy position for the week triggered, and price action went on to break out of our key level for the week. Remember, our key level for the week is at the 1.25900 level. We saw the breakout of that structure, which welcomed more opportunities to add more position to our existing trade. And during our live session on Wednesday, we identified this bullish trend line, which we said we are going to be using to guide our trading activity going forward for this week. So we had this trend line after connecting the series of higher lows, and what this simply means is that as long as price action remains above this trend line, we feel comfortable in our buy position, while the breakdown will definitely welcome an opportunity to sell. And this trend line was holding until yesterday's trading session. We acknowledged this whole situation here where we saw the breakdown of this trend line. But one thing I told us here yesterday is that we want to be very, very careful that it's not all the time that price action breaks down structures like this that it leads into a trend continuation in the direction of the breakdown. And one of the things we saw here during the live session yesterday was the fact that price action sellers found it difficult to break through the 1.26400 level, and in fact this continued till the early hours of yesterday. And at this point we decided here that it's very likely that the bullish momentum will come in. And in order for us to capture that bullish momentum, we agreed that we are going to be looking forward to a breakout of this trend line to give us the privilege to be part of a bullish move. And one interesting thing about this trend line is the fact that it also shares a confluence with that important level situated at the 1.26500 level. And with the breakout retest of that structure, we had another buy position triggered. And if you look at what we have here, since yesterday price action has moved over 140 pips in our favor. And don't forget that we also identified a couple of other key levels that we said we are going to be using to maximize the potential of this move if price action breaks out of the structure. So we had one at the 1.26710. We also had one at the 1.2700 area, an area where we added more position to maximize this move to the upside. So for those who have enjoyed this position all the way to the upside, I had my TP target hit at around the 1.2800 level personally. And for those who still have a buy position running at this point, I want to be advising that you want to be moving all stop losses to secure the current buy position. And the most appropriate area is the support line area around the 1.2770 level. Now that you have your buy position secured at this point, how do we intend to take advantage of a potential trading opportunity during the New York session today? Now, one of the things I would like us to take into consideration here is this impulsive move that started yesterday and in fact since the beginning of the week. And one thing for sure here is that at one point in time, there is a high chance that majority in the market will want to be doing some profit-taking activity, which would reflect on the chart as a retracement of this impulsive move. And considering that today is the last trading day of the week, a day which is peculiar with profit-taking activities, we cannot ignore the potentials of the sellers too as well. So we are going to be taking into consideration how to buy and how to sell on the GBPUSD together. So first of all, considering that price action has been bullish since the beginning of this week, I think since the second half of this week, let me put it that way, let's first of all look at the potentials that the buyers have in this market before we go into the details of what to look out for if we are going to be selling. Now, let me zoom right into what is really going on here since the later part of the New York session. Now, one thing you will have observed here is that price action has been consolidating, ranging between the 1.28180 and the 1.27700 level. And for us here, this is a sign that price action, participants in the market are very indecisive, waiting for a catalyst to drive price action. And if we consider the high impact event coming up today, remember we checked the economic calendar this morning and we saw that we have the Consumer Sentiment Index, which will be published in about 2 hours from now. This might likely be a reason why majority in the market the price action has been consolidating. So majority are looking forward to a catalyst that will drive price movement. So in as much as we have an impulsive move that brought us to this point, this whole consolidation phase could still turn out to be a trend continuation pattern where a breakout of the resistant level of this channel could incite a bullish momentum to the upside. And considering the fact that we have been profitable so far this week, we could still afford to leverage on the profit we have made so far this week to test waters around the 1.28180 level to see if we are going to be having another wave of bullish momentum from that area. So in that regard, I'm going to be having a buy stop order above the 1.28180 to see out if we can capture a potential trend continuation to the upside. So that is how we are going to be maximizing the potential of a bullish momentum here, setting ourselves up above the 1.28180 to capture any potential move to the upside. So that is how we are going to be buying the GBPUSD for today. However, in as much as we're looking out for buying opportunities here at the breakout of the resistance line, we cannot ignore the potentials of sellers as well. And these are based on 2 conditions here. One, the continued selling pressure around and below the 1.28180 level is a concern for buyers here, as sellers could still take over this market. And 2, considering the fact that today is the last trading day of the week, we might likely be seeing some profit-taking activities from those who had maximized the profit on this bullish move. And if we are going to be selling from the structure, how do we intend to join a retracement to the downside? Well, since we already have a flat channel to work with where we have the support line of the channel sitting at the 1.2770 level. As you can see, since the later part of the New York session yesterday, this level is yet to be broken to the downside. So if we are going to be selling at this point, we'll rather wait for price action to break down the 1.2770 level to give us a signal that sellers might likely be coming in to incite a sell-off in this market. And if we are going to be doing that, once we sight a breakdown of the 1.277, remember, we are not getting too excited, neither are we having a sell stop order below that structure. But one thing we are going to be doing as soon as price action breaks down the 1.277 is to scale down into our lower time frame. So you can go to as far as your 15 minutes time frame, or even 5 or 3, or even your 1 minute time frame, to look out for a retest of structure, which will be a sign that buyers are finding it difficult to climb back above this level. Then if this happens, then we want to be part of a bearish move to the downside. So this is how we are going to be looking out for selling opportunities around the 1.2770. Then have your stop loss. Remember, always ensure you move stop losses to secure your position. So for this one, we could have a stop loss of about 35 to 40 pips there to protect our portfolio against any sudden pullback that might take us out in a wider loss on this one. So that is that on the GBPUSD for today, and I hope I made myself clear. And if you have any questions whatsoever as regards to what I just explained here, feel free to let me know right in the comment section. So I will be taking some time to read through the comment section and see if there are any questions before I draw the curtain for today. All right, so I can see Susie MB, good morning. Taliongo, good morning to you. Thank you very much for checking in. So on this note, I want to call it a day here. It has been a wonderful moment with you guys, and in fact, I am even more grateful to be here with you to share this wonderful experience with you guys. And I hope that we are all well prepared to take advantage of any trading opportunities during the New York session today. I hope you screenshotted my screen. You marked out the key levels we identified. So let's just be on standby to catch any of this opportunity as we continue to monitor price action. So on this note, I wish you best of luck during the New York session, and I also wish you the best during the weekend. Okay. I can see 6422 just jumped in saying that we should do something on the XAGUSD, which is the silver. So let's see if we can do something on that one quickly. So I will just run through. I might not be taking it from the higher time frame, just run through and see what to expect today on this commodity. So where's the XAGUSD? It's been a while since I traded that one. I think the last time I traded the XAGUSD was about a couple of weeks ago, I think. And let's see what we have. Okay, yeah, so this is it. I actually bought this reversal pattern here a couple of weeks ago, and we were quite profitable on that one. And since then, I'm yet to come back into this chart. So let's look at this closely. I will remove these drawings here, and let's look at things from a technical standpoint. So what I'm going to be doing here is to take into consideration the activity of price action since the last week of the month of May. And the first thing you will observe here is that price action has been bullish. So when we connect the series of higher lows, we have a beautiful ascending trend line. So hold on a second. I would like to. All right. So we have an ascending channel to work with. Then also, I would like to project this ascending channel into this one, making that my major trend line. Hold on a second. You'll get to understand how this works in a moment. Okay. Then besides the trend line here, we want to have a key level that will guide our trading activity. And if you look at the structure closely, we have something I think around the $24 area, which is a very strong psychological area. So let's mark this levels out on our chart. So we have the $24 level. So you want to be marking these levels out as I mentioned them, so that you can be able to use it as a reference point when you're about to make your independent decision. So we have the $24 level marked out, which is going to be serving as our key level for today. And then there is a trend line since the beginning of this week. We can see our price action has been looking very bearish in this market. So we want to connect a series of lower highs to capture that bearish momentum. So should we thicken this a little bit to emphasize its importance? Okay. So now going back into the candle chart, now we have a simple setup to work with. And considering the fact that price action has been bullish since the beginning of this month, it is quite reasonable that we look out for buying opportunity. And if price action climbs above the $24 level, then at this point we want to be considering buying the XAGUSD. So a breakout retest of the $24 level will definitely be welcoming an opportunity to buy the XAUUSD today. Now we want to scale down into a much more lower time frame to see if we can identify a simple setup that we can actually use to guide that bullish momentum. And one thing about the $24 level here is the fact that it also shares a beautiful confluence with that bearish trend line that we just spotted. See the trend line here? You can see what a beautiful confluence that is with the $24 level. So if price action breaks out of both the $24 level and the bearish trend line, then at this point, that will be a sign that the trend line may no longer have the capacity to continue to negate the bullish momentum. So now when we scale down into the 1 hour time frame, we begin to see things more clearly. Now we have the 1 hour time frame here, and then things are looking, you can see around the trend line and the $24 area, we can see we've been seeing some consolidation phase around that area. That is one. So I would like to scale down to a much more lower time frame to see how to capture any potential move from this area. So the first thing I will do here is to acknowledge this is the 15 minutes time frame, mind you. And what we are going to be doing on the 15 minutes time frame is to identify, you can see it has been bullish since yesterday's New York session. So what I will do here is to connect the higher lows together to give us a trend line to work with. So this trend line here will continue to guide our trading activity for the later part of the week. So as long as price action remains above this trend line, we shall feel comfortable in a buy position in this market, and while we look out for more opportunities to buy. So anywhere above the $24 level seems most appropriate to join any bullish move, and you could have your stop loss anywhere below the bullish trend line to protect your position against any pullback. So that is how we are going to be buying the XAGUSD today. However, if price action drops in such a way that it breaches that bullish trend line, then at this point we want to start considering selling the XAGUSD. And in fact, we want to have a level that we are going to be using to guide that trading activity. And in fact, we have something around the $23.94 level. So you want to mark this level out also on your chart. So we have the $23.94 level marked out on the chart. So I'll place this right below. So what we are going to be looking out for to sell is for price action to break down, retest the $23.94 level. Then at this point, we shall start considering selling the XAGUSD for today. So it's a simple setup we have here on this commodity. And even thank you very much for letting me see this one, as I would love to take advantage of this opportunity too as well. So let's see how price action plays out. So you could have a buy stop order anywhere above the $24 1 cent level. Then let's see how that goes. But if price breaks down the $23.94 level, which also shares a confluence with this trend line, then we want to be looking out for opportunities to sell. So that is how we are going to be looking at the XAGUSD for today. I hope I made myself clear. If you have any questions, 6422, let me know in the comment section before I draw the curtain. So I will take the next 10 seconds to see if there are any questions. Then I will just draw the curtain and call it a day. All right, so in the absence of no questions, I want to assume that we're on the same page and my explanations are well understood. So on that note, I wish you all best of luck during the New York session, and I also wish you a wonderful weekend out there. And I also look forward to see you same time on Monday, 10 a.m. UTC, 11 a.m. West African time, as we come here again to get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.